in the global equities, and as a result we saw some correction in today's trade. Now, despite a 0.5% fall in today's morning trade, Nifty has bounced back and it is currently sitting above the 20,000 levels, and it did that almost instantaneously, which indicates that 20,000 could be a key support for the index moving forward. Whenever the selling pressure takes over, 20,000 will be a level that traders and investors should track moving ahead. Now, on the upside, according to experts, 20,200 will be the first resistance. Now, that is the record high levels which the Nifty scaled last week. After breaking 20,200, Nifty will probably look to gain another 100 or 250 points, and 20,300 to 20,400 levels could offer the next leg of resistance. Now, shifting focus from the headliners to the broader markets, Nifty mid cap and the small cap indices were trading flat in the morning trade today. Now, the mid cap index was down about 0.05% at 9:45, up about 0.5% at 9:45 a.m. this morning, and small cap index was trading with marginal losses of about 0.06%. India VIX also, which is the volatility index, also saw a spike of about 3%, and as a result the volatility index currently sits at about 11.16. It is still below the 12 mark, which indicates that the volatility is still low compared to the last 30 days. Now, also I'll just quickly run you through the sectors, Shweta. Now, most sectors were trading in the red in the morning trade, apart from the auto pack and the metal pack. Nifty Bank is among the top losers today. The banking index is down about 0.5%, and it is also opened below the 46,000 mark, which was seen as a crucial support for the banking index. And analysts had expected that if the index is able to hold the 46,000 mark, it could see another leg up, which could take it beyond the record levels of about 46,300. We have seen weakness in the banking pack, and most top banking names are trading with moderate losses in the morning trade.
All right, not a great start to the morning. Joining us is Gaurang Shah, Senior VP, Geojit Financials. Gaurang, thanks very much. Good to have you back. What are you making of the markets opening in not just slightly red, come to think of it, about 0.5% down, both Sensex and Nifty?
Morning, Shweta, and thank you for having me on the show. So, we discussed about the markets, I guess, last week. Quite a decent run up we had from 1st of September till date, and a little bit of correction was the order of the day. We have a truncated week. My sense, and even on Monday, in fact, we put out a market outlook saying that one should expect a little bit of consolidation and profit booking, and that's what we saw on Monday. Yesterday was a holiday. Today we're seeing that consolidation and profit booking mood, but what is visible on the screen is at least that dips are getting bought into, and our sense is that if you get for the dip, then possibly you should look at buying opportunity from a long-term point of view and identify all those stocks, sectorial picks that you have, and start your investments in a staggered manner and possibly accumulate a little bit more. Crude oil prices at beyond comfort zone. Rupee crossing 83 against the dollar is a concern, and of course a little bit of deficit on the monsoon front is also an overhang on the market. But these are all short to medium term, Shweta. I think, notwithstanding what is happening today or maybe what happened on Monday, the long term outlook remains quite positive as far as Indian markets are concerned.
Now, Gaurang, as you said, we are seeing some sort of consolidation at current levels, and in fact, if you look at the performance and the kind of run up the headliners have posted in the past couple of weeks, I think a consolidation that we are seeing currently, a 0.5% fall, or the index was almost flat on Monday. So nothing major happening, not a major pullback, right?
Not a major pullback at all. Look at the levels of where your Nifty and Sensex is. I think at 20,000 Nifty, or maybe about 67,200 Sensex, even if you get a couple of percentage correction on the downside, I think you should not complain. Remember one thing, on 1st of September this month, we were at 19,260. Correct me if I'm wrong, as far as my memory serves me right. And from those levels, we've seen 20,200 in a matter of just about 15, 16 odd days. So when you see that kind of a rally in such a short span of time, I think one should always expect a little bit of consolidation. And markets have had an history. Whenever you see in an all-time high, there comes a brief period of consolidation. So, not, one should not complain about these kind of small consolidation or corrections.
Okay. Now, the last time, Gaurang, you were here, you said that Nifty could, soon scale past the 21,000 mark. You still hold that opinion?
And if yes, how soon would that be? When do you see that happening?
Well, honestly, Shweta, we all should have patience.
Okay.
We've seen almost a 1,000-point rally in about 15, 16 days. Like I was just mentioning, on 1st of September, 19,260, and from there to 20,200. So markets have given us what we deserve. Expect a little bit of consolidation, but my sense is that possibly you will see not only 21,000, I think we'll see much more higher levels from here on. And remember one thing, Shweta, markets do take time to go up, but when they come down, there is no stopping them. And this has been the nature of the market. So let us not expect too much out of the market. Let's take it step by step. I think that would be a appropriate approach. We'll have earnings unfolding from October onwards, maybe first, second week, you will see second quarter earnings coming through. I think that should possibly give more decisive direction and wind to the market.
Okay. Now, and as far as earnings is concerned, since you touched on that, what is your expectation? Given inflation is going to be a bummer, at least for a lot of fast-moving goods, consumer sector, what is the expectation from this earnings season? Will it be better than the first quarter?
Well, so inflation is a concern, no denying about that. Crude oil prices will play an overhang as far as FMCG companies are concerned. Consumer discretionary spend will be pulled back a little bit, Shweta. So you will have possibly a subdued number from those sectors. In terms of numbers reporting on the better side, I think banks, NBFCs, IT should possibly be out of the weather that it was with the kind of deals that they have announced a little bit. Not that it will start contributing immediately, but over a longish period of time, we remain quite positive as far as IT is concerned, banking, NBFCs. Cement is the other sector that we remain positive on. Hospitality industry, hotels, that is, will look good. Healthcare industry, especially hospitals, will look quite attractive. And my sense is that defense, power generation, power transmission, power equipments, along with railway related companies, will report a decent set of numbers. So one particular sector that will possibly be a little bit of concern, I think major from short to medium, would be FMCG and discretionary spend.
All right.
Gaurang, I have a follow-up question on the IT pack. Now, rupee is also under pressure, which is, IT companies are mostly into exports. So it's good for them, right? Rupee being under pressure and trading near all-time low levels?
What my understanding is over here, that whether it is IT sector or whether it is a pharma sector, which is, throws positivity when rupee weakens against the dollar. But most of these companies in these sectors hedge their dollar income and they go ahead. So the impact will be there, but because of that hedge, I think we should possibly not expect too much. But my sense is that it will be a tailwind possible.
All right. And since you also briefly touched on crude remains a major concern. Do you see it hitting $100 a barrel anytime soon? What is the trajectory that you're picking up?
So OPEC Plus, led by Saudi and Russia, are proactively, looking at bringing down. And remember one thing, if I'm not mistaken, Shweta, I think it was on 1st of May onwards that they cut their output by 5 lakh barrels per day. And then they have further reduction coming through. We have a decent amount of comfort zone as far as our energy requirement in form of crude oil is concerned with Russia and Iran. And Iran happens to be the second and the fourth largest producer of natural gas and crude oil. And with both these countries, Shweta, we have a rupee-dominated local currency trade. So that comfort zone is there. So the very serious impact on India as far as crude crossing over to $90 a barrel or maybe hitting 95 and $100 a barrel. I think that will be cushioned with the kind of bilateral trade we have with Russia and Iran as far as our energy requirements concerned. But numbers is what very important. So of our total requirement, how much are we dependent on Russia and Iran, and how much rest of the world is what we'll have to possibly look out for. But there is no adverse commentary coming from the government as far as elevated crude oil prices are concerned.
All right, so not much worries there, Suyash.
Definitely,
Yes.
but crude has surpassed, it is almost at the $96 a barrel, Shweta. Brent has surpassed the 93, WTI futures has surpassed the $93 a barrel mark. So crude definitely remains a big overhang, especially since it is driving up commodity prices. Which could also increase the input cost for a lot of these companies, and as a result hit their profitability. Gaurang, I also wanted to touch upon Nifty Bank. Now it is among the worst performing sectoral index in today's session. It is down about 0.5%. Now the expectation is that banks may face some liquidity concerns going ahead. Also there are expectations that NIM, the net interest margin, may also contract. But at the same time, we are seeing PSU banks outperforming on a day-on-day basis. So what gives? Why is there a divergence between private banks and the PSU banks?
So for the last, not many quarters, Suyash, but for last many years, private banks were outperforming public sector banks. With the kind of, cleansing that has happened in the public sector banks, be it with respect to discipline in terms of recovery is concerned, gross and net NPA, bringing down provisioning, improving profitability, net interest income and margins, CASA ratio, consolidation has thrown in a lot of positivity for public sector banks. And this is one of the reasons why you're seeing public sector banks now outperforming private sector banks. Not to forget, Suyash, Nifty Bank was the first one to hit an all-time high. So whenever you have a sectorial index hitting an all-time high, followed by other, Sensex, Nifty or sectorial indices, whenever these kind of correction comes through, I think the one that led the rally would be the first one to possibly consolidate. Today, I believe there was some report by some entity on HDFC Bank, which is kind of downgraded HDFC Bank. So you will have a little bit of overhang. And weightage is also there. Our sense is that in the liquidity, I don't think that's going to be a big problem because there is enough liquidity in the system. And with the additional cash reserve requirement getting phased out by October, if I'm not mistaken, first week of October is what RBI has also mentioned. I think it will throw in a little bit of positivity. So on the earnings front, we remain optimistic about both private as well as certain public sector banks which are under fundamental coverage, and we also believe that there is very strong credit demand. So your loan book is going to grow slow and steady, and margins are going to stay intact and in fact improve. And with recovery of gross and net NPAs and provisioning coming down, you might see a little bit of outperformance from public sector banks, because that's where there was a huge concern in terms of large number of gross and net NPA and provisioning. So that will start ebbing off a little bit. And in terms of valuation also, because public sector banks were underperformers and now there is a change for good, I think quite a bit of, long-term investment liquidity is getting attracted towards public sector banks. But a word of caution over here. There are a lot of smaller, mid-size, small-size public sector names wherein we have a concern in terms of sustainability, in terms of earnings that are reported. 1-2 quarters will be extraordinary, followed by a disaster performance. So we need to have sustainability in terms of earnings for those small public sector banks.
All right. Gaurang, also just if we could quickly talk about the FMCG pack. Now FMCG pack, I think it's the only sector that has not participated in the recent 1000 point run up of Nifty to all-time high levels, and even today it's down about 0.7%. Now, especially that we are moving into the festive season, do you expect the FMCG pack to gain some traction, see some sort of buying interest?
And also, just to add to that, I think FMCG, in fact, on Friday and this Monday, we were extensively discussing, me and Suyash, as to what happens with the FMCG sector come the festive season. They are hoping to perhaps sell more, but also, giving out more doles, reducing prices of a lot of goods, also in a hope that people will buy more in days and months to come. How is that expected to dip into their margins? Their margins will, of course, take a beating, and all of this happens on the back of rising crude oil prices. Will that be a double whammy, perhaps, for the entire sector?
So let me just elaborate a little bit more over here. So, crude oil prices had this impact on the FMCG pack. Point number one. Point number two, deficit monsoon is also a concern because large part of the volume growth for FMCG companies is credited to the semi-urban and rural India. And the income for semi-urban and rural India largely comes from the agri activity that they have. It all depends upon what is the kind of output that we have, what is the income levels for semi-urban and rural India, and their capability of discretionary spend or their desire to spend more on higher category of goods. Our sense at Geojit is that for the second quarter, given the backdrop of events like higher crude oil prices and deficit rainfall, the demand from semi-urban and rural India is going to be a little bit below the weather. It's going to be down. High-end margin goods numbers would be relatively lower, but then mid and entry-level goods, I think there will be an uptick. How much of that demand is being taken care by metro, tier 2, tier 3 cities is what we'll have to wait and watch, and that will possibly be clear when we have the second quarter numbers unfold and we have the commentary from the respective management of FMCG companies. But notwithstanding this, another 2 to 3 months kind of an overhang on the FMCG pack, India remains a consumption-driven country. It was, is, and it will always remain. In terms of discretionary spend and terms of distress, you may not be spending on high-end premium goods, but you will definitely switch on to alternatives which are available, be it metros, tier 2, tier 3, or semi-urban or rural India. Ad spends, discounts may create a little bit of pressure as far as profitability is concerned.
All right. Pressure on FMCG companies, tepid demand perhaps expected in weeks and quarters to come. But let's also quickly shift focus to some of the stocks we are tracking, Suyash, this morning.
Certainly, Shweta. So first, let's talk about Tata Motors. Now, Tata Motors on September 19 said that it will hike the prices of its commercial vehicles by up to 3% starting next month. So from October 1 onwards, the price of commercial vehicles will see a bump up of about 3%. Now the price hike will be across the entire range of CVs, and it is being implemented to to offset the residual impact of input cost. Now this is a third price hike from Tata Motors on the CV portfolio. The first came back in January when they hiked the price by about 1.2%. Then in March they hiked the price by about 5%. So effectively this year alone CV prices have gone up by about 9%. Now Gaurang, I have a very simple question for you. The price hike will definitely positively impact the top line of Tata Motors, but what kind of impact do you see it having on the bottom line? Because the fact remains that input cost is still elevated. Now this time it is being driven by crude, which is threatening to break past the $100 barrel mark.
So Suyash, well, let's face it, it's not only the input cost, but also the policy changes by the road transport authorities and ministry, making a vehicle safer and more comfortable is what has been spoken by the Honorable Minister Nitin Gadkari. So my sense is that whenever you want to have additional features available, whether it is a passenger vehicle, four-wheeler, or a commercial vehicle, wherein he has spoken about more safety and cabin-related comfort with AC, etc., cost is definitely going to go up. And whenever these kind of factors come into effect at ground level, respective companies will definitely price their hike their price and pass it on to the end consumer. How much of that? I think it is at a very nascent stage. It is an announcement. For October onwards, we'll see these price hikes coming through of 3%. Overall, how does it impact the month-on-month numbers for all those companies who manufacture CV and have taken price hike? Will be a wait and watch. But not only that, my sense is that, excuse me, that scrappage policy, which has also been put in place, will add to the positivity. Along with that, you have dedicated freight corridors, not only for railways, but even for road transport. You are having a lot of new projects getting inaugurated and opened up. So demand and e-commerce is also something that has a push in terms of vehicle demands. So our sense is that it may be a short-term kind of a negative, but long-term we remain extremely positive. And not to forget, I think the economic activity is picking up, related to transport, related to mining, related to construction, etc., etc. So demand for such vehicles will also be going up over a period of time.
All right, and on back of that news, Tata Motors stock has reacted positively. It's up over 1% this morning. What sort of impact will that have on the overall numbers and the sales figure? We'll have to wait for that. Comes into effect from 1st of October onward. But let's shift focus to HDFC Bank, which is also in news this morning.
Yes, Shweta. So HDFC Bank has reappointed Shashidhar Jagdishan as the MD and CEO for another 3 years. Now, Jagdishan took over from when Mr. Aditya Puri stepped down back in October 2020. So he has already been at the helm for 3 years now, and he'll continue to hold that position for another 3 years. Now, as we were walking into the newsroom, Shweta, there was another bit of news coming in that
the asset quality of
asset
HDFC.
quality, that this is coming from HDFC Bank. Now,
Right.
there was a meeting between the top level management and some of the analysts, and HDFC Bank said that it expects worsening of net interest margins, worsening of net worth and asset quality in the very short term, given that it has recently merged with HDFC, whose assets, at least the GNPAs, were on the higher side. So that could be a drag on HDFC Bank. Even today, we are seeing, the stock is down about 3% or so. And Gaurang,
I also want to know, and maybe from Gaurang itself, is this a temporary blip, Gaurang?
On HDFC Bank, Shweta?
Yes.
So, again, I get excited when such reports come because I get to invest in a very strong entity at a correction, and we remain constructive in terms of positive outlook on HDFC Bank. We have a target of, if I'm not mistaken, 1,980 or so. So, and again, today, if I'm not mistaken, one entity has come out with a sell report with a concern on margins and earnings. I think there is another 1 or 2 entities which have come out with a higher price target for HDFC Bank. So, which one do you choose? So, my sense is that, if I look at the history and the earnings capability, credibility of the management and the opportunity that lies ahead with the merged entity, we remain absolutely positive on HDFC Bank. There can be problems in any entity, however strong or however weak that company is depending upon what the opportunities and situations are in the future. But all these things are short to medium term. My sense is that long term, if you are invested in HDFC Bank, my advice would be to continue to hold your investments. And if you're looking at opportunities on correction to invest in HDFC Bank from a long term point of view, then days like today are the days when you should identify corrections as an opportunity to invest in.
All right. Let's also quickly take a look at other stocks that we are tracking, Suyash.
Certainly, Shweta. So Reliance Industries was also in the news today. Now, as you know, Reliance Jio has launched Jio AirFiber yesterday on the occasion of Ganesh Chaturthi, as was given the timeline was given during the annual general meeting. Now, Jio AirFiber has been rolled out in 8 metro cities at a plan of about 599. Yet the stock took a beating this morning amid a subdued market sentiment, and it was down about 2% in the morning trade. Another stock that was in the news was NBCC. Now, NBCC was awarded a work order of 150 crore, which includes repair and renovation of KVIC properties pan India. Another stock that was in news was Blue Star. Blue Star has launched a QIP of up to 1,000 crore and the floor price for the same has been set at 784.5. The stock was up about 8% in the morning.
Absolutely. But I think let's quickly touch on Reliance, and before my colleague Kartik Malhotra walks into the studio to explain what Reliance Jio Fiber launch means for Reliance as an entity, for people as far as fast speed internet is concerned. But specifically on Reliance, there's not much impact there on Reliance of the Jio Fiber launch, Gaurang.
So it's, just to add one more point, what was mentioned about Jio AirFiber. So Jio AirFiber and Jio AirFiber Max, there are two offerings from this particular product, depending upon the speed and the plan that you want to choose. And they've already got a huge number of subscribers for this. And there is a huge demand. Let me say this, Shweta, because at ground level, I have seen the kind of inquiries that have come in for the connections. And the entire technology that it has been built on is, optical fiber-free connection with a great tariff and relatively extraordinary speed. There will be time because it was just, showcased yesterday. So numbers will possibly start coming in the next couple of months and quarters. And that will possibly translate into a decent earnings because there is huge requirement at ground level as far as issues with connectivity with the current level of technology that we have, and how successful is this optical fiberless connectivity with a decent speed and a great offering is concerned. We have a buy recommendation on Reliance Industries with targets of close to about 3,000 from a long-term point of time. And I think it would be a game changer. Soon you will have competitors also coming out with some better offerings.
Absolutely. We'll wait for those better offerings. But I think for now, Gaurang, we'll let you go. Thank you so much for taking time out. Thank you for being with us here on News 9.
Thank you so much. Thank you.
But staying on with Jio AirFiber, for those who are tuning in right now, Kartik Malhotra is in the studios with us. Kartik, what exactly is Jio AirFiber? Are you saying that I will get high-speed internet connectivity without any wire at my home today?
Absolutely. That's exactly what I'm saying. That's not exactly what I am saying. In fact, that is
something
something that
Reliance
Mukesh Ambani is saying. That is something that his son Akash Ambani, who heads Jio Infocom, is saying. And that is something that I think everybody right now who has got that access to Reliance Jio Fiber, which launched yesterday on the occasion of Ganesh Chaturthi, 19th of September, is right now going out and saying. So what is Jio Fiber? Jio Fiber, very simply put, is satellite-based internet. Very similar to what Elon Musk has done in other parts of the world with something called Starlink.
Is it that device? I'm very surprised. So it's a portable device, exactly, and you can carry it anywhere.
That's the device. See, portability, I think, what it really does is that there are premises that get identified, and those premises have this device called the Jio Fiber, and this device speaks directly to the satellite. I don't think it's portable because it does not have a SIM card, and the geotagging, sort of the geotagging, gets the satellites to focus the internet beaming onto that device placed at a particular location. So you can't really carry this modem plug and play anywhere from what I understand. I don't even think it's called a modem. It's called a JioFiber pod. So so you bring this, you get this device, and this device lets you access internet directly from the satellite. No cables really coming into your home, connecting this device to some other optical fiber laid wherever else in the world, right? So yeah, so now again, disruption. With Reliance, you've got to talk about disruption, and without disruption, the Reliance story is never complete. So what has Reliance done this time around? No surprises. The base plan for Jio Fiber is available at 599 rupees a month. Right. Compare this directly to Airtel. Airtel's base plan starts at 799 rupees. So straight away, another price for in the home broadband segment is going to play out. The endeavor will be to bleed out Airtel. Airtel's endeavor will be to stay afloat, but let's see how that goes. So 599 rupees is what you can opt for as the entry level plan to get access to the Jio Fiber broadband. This gives you a speed of 30 mbps. You could take your plan up to, and then there is Jio Fiber Max, the entry level for Max, which offers you a speed of 1 Gbps. This was a dream, you know, anybody who ever wanted to access torrents, 1 Gbps was a dream, right? And 5G is meant to offer you that 1 Gbps speed. So you can go up to a plan of about 1500 rupees a month, for which you get the speed of 1 Gbps. Along with that, Reliance Jio has also bundled OTT subscriptions and entertainment channels and everything, you know, which you want to do with your internet. Now, how's this really going to pan out? I think the endeavor right now is to launch it full-fledged in 8 metro cities: Delhi, Mumbai, Bangalore, Chennai, Hyderabad, Kolkata, Ahmedabad, Pune. Have I missed out on any? I don't know. So eight metro cities is where the service is already launched. Now the speed of reaching or translating this to the remote areas of the country and really democratizing data, democratizing internet is the endeavor, the stated endeavor with which Reliance has initiated this project. Now, the idea being that you really don't need to lay optical fibers across the length and breadth of the country.
So you don't have to dig up the earth.
A satellite-based internet service can be provided to the remotest of remote areas in the country.
You know, it's very interesting. And I was listening to one of the excerpts of Mukesh Ambani speaking at a press conference, speaking to perhaps people at a conference, and he said that one of the reasons why Jio was launched, or the idea of high-speed internet was conceived, was because Isha Ambani happened to complain about no better internet connectivity at Antila, their own home, and that was the conception of the idea. But come to think of it, look at the integration that Jio has done. You're using a mobile phone, perhaps a Jio SIM, to call up operator to bring you that JioFiber connectivity through which you'll use internet and everything. I mean, every other device that you have access to in your daily home is now from Reliance's stable. I mean, I'm quite amazed by the progress that Jio has done and Jio has made over the last few years.
Yeah, not surprising, Shweta. I think, you know, when Reliance enters any industry, its real objective is to carpet bomb, land grab, and be among the only dominant players in that industry, right? Now, but there's another story also playing out, and since you mentioned, you know, this whole data connectivity and smart homes, etc., look at how internet can enable access to healthcare. We've seen access to education during the COVID lockdown, right? Access to healthcare, access to education, access to banking services, pretty much access to anything that you need as part of your daily existence. And this democratization of data, India being among the very few countries which offer data at such a cheap cost and offers you a bouquet of services that can be. So when you mention Reliance, you know, Reliance is not just playing the data game. It's not just playing the internet connectivity game, it is also playing the platform game. So now you will actually start seeing the rollout of a lot of other platforms for online education, for online healthcare, for online delivery. You already have Jio and a couple of other such platforms, but online delivery of services, smart homes, Internet of Things, you know, your phone talking to or your internet letting you do physical jobs like switching on a light or switching off the AC. So with Reliance coming into this whole data game, it is not restricted to usage of data and devices that use data alone, but every platform where you use data to have some sort of a social transaction. So that is, and I say social transaction because it is going to get into healthcare and education services in addition to commercial services like shopping.
Absolutely. And to continue that story, using Jio data now, Jio Internet, you watch, Jio Entertainment, Jio Cinema.
That is where the World Cup is going to be.
That is where the World Cup is. Then you order from Reliance Retail. It's literally a part of everything that you do. I'm quite amazed at the expansion Reliance has made as industries. Perhaps another story, another day warrants to track that expansion, starting from oil up into everything now. Everything you I think, where to how you access internet. It's a fast expansion of Reliance Industries, and we continue to track that story. But another story that is making news headlines this morning is Akasa. Akasa looks like it's flageoling. The newly launched airline does not have pilots because pilots have left without a notice period.
Yes, Shweta. So trouble definitely mounting up in the air for Akasa. Now, what really happened, right? Let's take a step back and see what happened. Pilots at Akasa decided to quit. And it wasn't 2 pilots, 3 pilots, 5 pilots. It was as many as 43 pilots have decided to quit. Now, in a free market, labor laws permit you to leave and join competition. But Akasa had a contractual stated agreement with pilots that there needs to be a 6-month notice period. Why a 6-month notice period? It seems, fairly elongated. Now, the challenge is that training a pilot on any, and I'm not talking about the aircraft, but just the protocol of every airline, the routes that airlines take, the whole training after a pilot has been onboarded or inducted into the airline is a 7 to 8 month process. So you can't hire a pilot today and put him in the cockpit tomorrow. You've got to let the pilot run with, perhaps as a co-pilot, as studying from the ground, the routes and the operation protocols that the particular airline follows, the codes that the airline follows for a good period of 7-8 months. So Akasa, like pretty much every other airline, has a stipulated contractual 6-month notice period for pilots. But pilots cited an earlier ruling, which again in free labor markets does not require anybody to serve notice period, and have decided, 43 of them
only
have decided
in aviation
to,
sector or in
no,
every?
actually, these labor laws are, they don't mention sectors, industries per se, but
everywhere.
Yeah, so if you're doing a particular skill, the laws permit you to use those skills to earn a living anywhere.
Okay.
It cannot be an impediment to prevent you from using your skills to make a living.
Okay. And this is after Akasa took those pilots to court.
That's right.
The pilots
That's
that
right.
are quit
So
without
two
notice.
courts in question here, or in news here. There is the Bombay High Court and there is the Delhi High Court. So yeah, Akasa knocking on the doors of the court, saying that we need those pilots to come back and serve their notice period, because without these 43 pilots, Akasa right now is unable to fly as many as 24 flights a day, 24 routes a day. Now this catapults to almost 600-700 flight cancellations in a month. Now in the month of September alone, approximately over 700-800 flights have been cancelled already. Okay. And this problem has actually been brewing right through August. Now, more than midway into September, almost towards the end of September, 2 months with a fleet of aircraft grounded, not enough pilots to fly them, for a new airline which in any case has made massive capex investments into getting the aircraft and the negotiations they would have had at airports with lessors, etc., unable to fly. So how do you make money? So now I think the million-dollar question is, and we know court matters take long to resolve, and removing an earlier precedent to rule in favor of the airline against the pilots, even if that were to happen, it's not going to happen tomorrow.
Absolutely.
So it is going to be a long drawn process. Until then, flight cancellations, disruptions in the schedule, passengers getting inconvenienced, and moreover, a loss of revenue for the airline. So I think the million-dollar question that we are all arriving at is that, is this going to be the next airline in India to get grounded? We've seen what's happened with Go First, yet to be resolved. We've seen what's happened with Jet Airways. We've seen what's happened with Kingfisher prior to that. And interestingly, these pilots who have quit, the 43 pilots who have quit up until yesterday, are stated to have joined Air India Express.
I was about to come to that.
Which is direct competition.
So where are Akasa pilots going? Why are they quitting is the question.
So I think why they are quitting is not something that we know right now. I mean, pilots are paid well, at par with industry across the world. So compensation may not be, the only issue. There could be other softer issues, as we call them, brewing as well in the airline, which we don't know. I mean, it's in the realm of speculation right now. But yeah, I mean, compensation could also be, a way of attracting. If you remember, soon after Tata had sort of done the rebranding of the Air India airline, and at that time there were these large front page ads in every newspaper saying that we want to hire pilots at a time when Tata Group itself had clashes with its own pilots over salaries not being paid and rostering and scheduling of holidays, etc. So yeah, I mean, it could be compensation at some level. It could be maybe pilots seeing better faith in a brand like Tata, Air India, continuing to to survive and fly longer than a startup like Air Akasa. So it could be anything, but the fact of the matter is that pilots have quit without serving notice. Matter is being now taken to the court, and Air Akasa grounded until, not all flights, but at least 25 flights a day grounded.
But troubles, of course, brewing for
because
Akasa.
Finding pilots is not going to be easy for Air Akasa.
Not easy at all. But another airline that we continue to focus on this morning would be Indigo. Indigo, we are given to understand, will finally be offering some sort of drinks, perhaps juice, or whichever beverage you like, free of cost, in addition to what you are buying, only if you are buying a snack.
You can't say it's free. So, okay, so
on board.
Let's see where it all started. It started, you know, on 18th of September, Rajya Sabha MP Mr. Swapan Das Gupta had taken a flight, and he was flying Indigo. And he landed and tweeted out on the platform called X now that hey, it's, you know, it's almost criminal to charge 100 rupees for a can of Coke, and snacks in any case are priced at 200 rupees. So somebody wants to eat something on an airline on which you've bought in any case, you know, a ticket which has gone into a couple of thousand rupees. So minimum to be paying 100 rupees for a can of Coke. And a couple of days after that, in fact, news came in just yesterday where Indigo has said that it is going to stop serving canned beverages in the airline in any case, right? So it's citing issues like moving towards a green future, sustainable, eco-friendly practices, you know, in play to reduce usage of canned beverages. But parallelly, it has also said that if you purchase a snack, so it's not complimentary. If you purchase a snack, and I think the starting prices of a snack being about 200 rupees, then you get
complimentary
a glass,
with the snack.
Then you get a glass of juice or Coke, whatever you prefer, complimentary with that. So, yeah, so I think anybody who is taking a flight, you know, in the next couple of days flying Indigo, if you buy a snack, you get a complimentary drink, but you don't get it complimentary if you don't buy any snack to eat.
You've got to buy in order to drink. That's the tweet on your screens from Swapan Das Gupta, member of the parliament. I discovered mid-air on Indigo flight that you can't buy a soft drink. The airline has made it obligatory to also buy a snack, regardless of whether you want it or not. This is coercion.
So
and
Indigo has denied that. And honestly, even I haven't faced that.
No,
you can't be coerced to
neither.
buy a snack.
Absolutely.
Right? You could have a snack pre-booked, or you may choose to purchase something, you know, from the
I mean, you can choose to buy a snack or the drink, whichever, or nothing.
Or neither,
or neither. So that, of course, is the clarification that's come in from Indigo. But some good change there as far as policies and a complimentary drink along with the snack. Important to mention that for people who will be flying through Indigo. But shifting focus to a major story that is breaking by the way of deteriorating US-Canada relationships. The relationships will also have an impact, the tensions rather, will also have an impact on the existing trade between the two countries, likely to take a beating, Karthik.
Not necessarily, Shweta. So, you know, again, let's just take a step back and see what has happened. Niger, the chief of the Khalistan Tiger Force, KTF, had been gunned down on the soil of Canada. And the Canadian Prime Minister, Justin Trudeau, pretty much laying allegations of the Indian government's hand in this separatist leader getting gunned down. India vehemently denying it, calling it absurd, right, and calling it motivated. Now, what this really does is that there is, in any case, this Khalistan row, which has been, you know, which has been finding fans in Canada, and Canada has attracted over the last many decades a lot of Sikh Indians, you know, making it across the
major
border
diaspora,
and making a living
total.
in Canada. So any sort of fanning of ambitions in Canada does have a direct impact to the Sikh community there as well as back home.
In India.
Now, India has vehemently denied these allegations, and what Justin Trudeau also, you know, in his defense stated later yesterday in his parliament, that these are informed sort of, you know, allegations, and these are up for discussion. He's not saying that these are confirmed reports, these are allegations, and he's admitted to that, and wants to rake up this subject for further investigation, further discussion. India at the same time vehemently denying any role of Indian authorities in Niger getting gunned down. Now, trade, I believe, is and should be outside of geopolitics, outside of these tensions.
But just one quick clarification that's come in multiple newspapers since yesterday, that perhaps Canada has paused a possibility of a trade relation, a bilateral trade treaty with India. Any merit to those reports?
So there are multiple reports coming, Shweta. Canada, in today's papers, if you see, you know, today's Financial Express states that Canada has said that the bilateral trade treaty is going to carry on irrespective. Now, all this is also happening at a time when the UN General Assembly is in motion. Now, trade, I believe, if you don't look at government to government trade, and if you just look at business to business trade, unless borders are sealed and unless you arrive at a situation where you declare a particular state in conflict of interest to your national ambitions, trade carries on, right? Now, is it going to be the most preferred trading partner? Will it continue to have that rank of getting, you know, some sort of SOP, some sort of incentives, you know, from India? And should India expect a reciprocity from Canada with respect to trade ties? We don't know. As we know right now is that about $4 billion worth of trade to Canada from India as exports, $4 billion worth of trade imports from Canada to India, making the total trade at about $8 billion worth, split equally. So any current account deficit between the two trading partners is unlikely to happen. Right now, now there is, because it is an equal 4 to 4. You know,
total trade is over
total
billion
trade being $8 billion. So you know, it's an equal measure of give and take, 4 plus 4. So anybody losing out in this bilateral deal is going to be both parties equally.
Absolutely.
So it would be in equal interest of both parties to at least keep trade in a separate basket and carry on with it irrespective. Now, what are areas which may get you know, influenced when it comes to trade? Students traveling to Canada. That is one major catchment area for a lot of Indian students who want to study abroad and are unable to find admission in US universities, prefer Canada as a second choice. Now, with tensions brewing, geopolitical tensions brewing, Indian students traveling to Canada could take some sort of a beating, right? This is number one in the immediate future. India is a large importer of masoor dal from Canada. So pulses import from Canada to India in the short term with any sort of restrictions could further add to food inflation in India. And food inflation in India has just inched a little under double-digit numbers. So food inflation may take in the short term some impact in case of any restrictions on trade. Students traveling, of course, admission season is over, but going forward, if these tensions were to continue, students going to Canada could get impacted, you know, in some measure. And
the business relations in general?
Business relations, you know, IT, we have created more than 17,000 jobs in Canada. Indian IT companies and all the big IT companies, Wipro, Infosys, TCS, etc., have offices in Canada, where it is contributing to the Canadian economy, it is creating jobs, and those jobs are servicing global clients in any case. So, you know, would that get impacted immediately? Perhaps not. What are the other Canadian investments coming into India? Startup investments come into India. So you have the Canadian Pension Fund also making investments in India, investing in Indian startups, Indian equity markets to serve as return the pension needs of the aging population in Canada. You also have Brookfield. Brookfield has done data centers with Reliance. So Brookfield is a major investor also in Indian equity markets, in Indian startups, and has trade deals with Indian counterparts. And then you have a couple of other venture capital funds operating in Canada, which have invested even in companies like Paytm, even in companies like Nykaa. So these are investments already made. Would they pull back their investments immediately? Maybe not. Okay. I don't think we should jump the gun too much at this stage,
right,
and draw any conclusions on trade getting directly impacted. I think this is a difficult time. In fact, the political relation between the two countries is perhaps at its lowest in the last many years right now. And let's give diplomacy a chance to try and work out, you know, this tiff amicably, and not jump to conclusions yet on trade directly getting impacted, at least not in the immediate term.
All right. There's no likely impact on trade just as yet. Remember, the goods trade between the two nations stand at $8 billion, both imports and exports to and from Canada and to India. Unlikely to be impacted anytime soon. We'll keep bringing you all those updates right here on Newsline. Thank you very much for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2. No end in sight. Streaming now. Akshay Kumar makes his Marathi film debut in Mahesh Manjrekar's Vedat Marathi Veer Daudale Sa. What's inspired Khiladi Kumar to foray into new terrain? Playing iconic Maratha king Shivaji Maharaj, he's jumping on a bandwagon that spells magic on the box office. Why are filmmakers in a rush to chronicle the life and times of Shivaji Maharaj?
Why do we feel the hunger, the need? Why are we compelled to make a film on Chhatrapati Shivaji Maharaj? And that too so many films. For a simple reason, he was the people's king.
So I think there's this herd mentality in the film industry. One film clicks, then there's a line of producers who announce films with similar storylines.
Personality that has not been adequately explored on the big screen.
I think among filmmakers the craze is because the Marathi audience is somehow